Welcome back to Candlestick Signals for today's market, July 30th, 2025. Buckle up, traders, because we've got a roller coaster of candlestick signals to dissect. From bullish engulfing patterns in tech giants to hammer formations in financials, today's session was a technical analyst's dream. Let's dive into the action and uncover the hidden messages in the charts. Our first stop is the technology sector, which continued its impressive rally with a staggering 9.2% gain, translating to a market capitalization increase of $72 billion. The software and IT services sub-industries led the charge, each posting gains of around 10%. Hardware and storage weren't far behind, with a weekly return of approximately 8.5%. The sector formed a powerful bullish continuation candlestick pattern, signaling that the current uptrend is likely to persist. This pattern suggests that buyers are firmly in control and are pushing prices to new heights. Apple AAPL stole the show in the tech space, breaking through key resistance levels following a textbook bullish engulfing pattern. The stock surged 7.3% on exceptionally high trading volume, fueled by stellar earnings that beat analyst expectations. NVIDIA mirrored this bullish sentiment, with its own engulfing pattern contributing to a 6.8% daily gain. These movements were accompanied by notable technical confirmations, including MACD crossovers that affirmed short-term upward momentum. Moving to the broader market, the S&P 500 index broke above its 20-day moving average, clear indication of growing bullish momentum. This technical breakthrough occurred at 2:15 p.m. EST, sparking a flurry of algorithmic buying that pushed the index to close 1.7% higher. The RSI oscillator for major indices hovered near neutral territory, giving neither overbought nor oversold signals and leaving room for potential further upside. In the healthcare sector, we observed a series of doji candlestick formations, particularly in defensive stocks. These patterns highlight market indecision and potential trend reversals. Johnson & Johnson J&J formed a classic doji at a key resistance level, closing the day with a modest 0.3% gain. This setup suggests traders should watch closely for possible trend changes in the coming sessions. The overall healthcare sector saw a 2.1% increase, equating to a market capitalization change of $18 billion. The energy sector presented intriguing inside bar setups, suggesting consolidation ahead of upcoming macroeconomic data releases. ExxonMobil, XOM, and Chevron CVX both displayed this pattern, with their daily ranges completely contained within the previous day's high and low. The energy sector as a whole experienced a 1.5% uptick, representing a $12 billion increase in market cap. Traders should keep a close eye on these formations for potential breakout opportunities in either direction. Consumer discretionary stocks continued to outperform, with Amazon, AMZN, and Tesla TSLA displaying bullish continuation patterns. Amazon surged 5.2% after forming a three white soldiers pattern, a highly bullish signal that suggests strong buying pressure. Tesla, not to be outdone, rallied 4.8% following a bullish flag formation that resolved to the upside. These movements contributed to the sector's impressive 4.7% gain and a $43 billion increase in market capitalization. The financial sector provided one of the day's most interesting technical setups. The Financial Select Sector SPDR ETF, XLF, formed a textbook hammer candlestick pattern, signaling that sellers may be losing control and buyers are stepping in near support zones. This formation occurred at 11:30 a.m. EST, coinciding with a notable uptick in trading volume, while the sector closed with a modest 1.2% gain, equivalent to a $9 billion market cap increase. This hammer pattern could foreshadow a more significant move in the coming days. In the basic materials sector, we observed moderate growth. Selected materials stock leaders like Newmont, NEM, and Agnico, Eagle Mines, AEM, POSTING, strong gains of 3.5% and 4.1%, respectively. The overall sector market cap moved positively within the week, reflecting ongoing demand in core commodities and industrial resources. The sector saw a 3.2% increase, translating to a market capitalization change of $25 billion. A bullish engulfing pattern formed on Wednesday, indicating a potential reversal of the previous downtrend. Today's trading session has painted a cautiously optimistic picture for market sentiment. The bullish engulfing patterns in tech stocks, coupled with hammer formations in financials, suggest a growing appetite for risk among investors. However, the presence of doji patterns in defensive sectors serves as a reminder that uncertainty still lingers. The technical landscape further supports this mixed but generally positive outlook. The S&P 500's break above its 20-day moving average is a clear bullish signal, while the neutral RSI readings leave room for continued upside. Volume spikes accompanying bullish patterns in select tech giants affirm breakout conviction, particularly in the case of Apple and Nvidia. Looking ahead, traders should approach the market with measured optimism. The overall outlook favors cautious buying, particularly in momentum-driven sectors like technology and consumer discretionary. However, it's crucial to monitor defensive names for potential reversal setups, as indicated by the doji formations in healthcare stocks. As we wrap up our analysis for July 30th, 2025, it's clear that today's session has delivered a wealth of actionable candlestick signals across major sectors. These patterns empower traders and investors to leverage technical analysis for identifying market opportunities. The blend of bullish continuations in growth sectors and potential reversal patterns in defensives sets the stage for selective positioning in the days to come. Remember to keep a close eye on evolving signals in tomorrow's session for timely entries and exits. With macro themes continuing to drive price action, robust risk management strategies should remain a top priority for all market participants. In conclusion, today's market activity has provided a technical analyst's playground, with candlestick patterns telling a story of cautious optimism tempered by pockets of uncertainty. As we move forward, stay alert to these technical signals, but always consider them in the context of broader market fundamentals and economic data. Happy trading, and we'll see you tomorrow for another exciting day in the markets. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.